So we've covered the first part of entry where I said we have confirmation entry, we have
Yes,
a entry, and we have an aggressive entry. So
yes,
they will be covering
the factor.
fractal confirmation and double confirmation. So what I said is that
Yes,
fractal confirmation and double confirmation looks similar. They look like the same, but they are not exactly the same. So I'm going to explain further, but truth be told, I just see few traders using fractal confirmation. As a matter of fact, a lot of traders don't use it. Personally, I don't usually trade with fractal confirmation, but if I see it in the market, I do approach it because I know that whenever I see fractal confirmation in the market, I have the confidence to take a trade because it gives valid signal. So that's one good thing about fractal confirmation. So let me go ahead and give you a sketch of what fractal confirmation looks like. Now, in the situation, we have a zone. So this green movement is our point of interest, and we have the break of structure. Now, firstly, if I'm to explain what fractal confirmation means, fractal confirmation is simply the realignment of price across time frames. This means that what you are seeing on the higher time frame, you need to see it on your medium time frame, and you equally need to see
on
that
the
same
lower
thing
side.
on the lower time frame. So when you see all these things across these time frames, it means that price is saying the same thing. That is, if you are seeing a bullish pattern on the higher time frame, you see the same bullish pattern on the lower time frame, on your medium time frame, then you probably see the same bullish pattern on your lower time frame. It means that price is ready to move to the upside. So that is exactly what it means. So this is a quick sketch. Price is bullish. The green candle is your higher time frame. So I'm going to use the 2 hours time frame as a higher time frame. So this particular green candle right here is a higher time frame. So this is it right here. The green sketch right here is your 2 hours time frame, and this is your point of interest you are looking to trade from. Now, this is what the 2 hours time frame is saying. The 2 hours time frame is telling you that price is bullish, and you have a point of interest. This is a demand zone. When price returns to a demand zone, we usually look to buy. Now, what you do is you wait for price to do what? Return to this your demand zone. So now that price has returned to your demand zone, what are you going to do? What you basically do is you're going to drop to your lower time frame. Once you drop to your lower time frame, you wait for a shift of market structure on the lower time frame. And you know what shift of market structure means? Shift
Mm.
means that we're going to anticipate a bullish movement. So where you'll be waiting for this shift is actually on your medium time frame, because this time we'll be doing it with 3 different time frames. This is more like a multi-time frame analysis where you want to see the same pattern on 3 different time frames. So the 2 hours time frame, price is bullish and price is in our demand zone. Now, this is where you drop to your 15 minutes time frame. Now, what do you want to see on your 15 minutes time frame? You want to see a shift in market structure. So I'm going
Shift.
to be marking
Okay.
the 15 minutes zone with a red candle. So a red sketch actually. So this is where we have a 15 minutes shift in market structure, because you see price moves above this particular high. This is our higher low, our
There's a break
lower
of
high
structure.
actually. So we had that
Mm.
particular shift in market structure.
Mm.
So once you have your 15 minutes shift, what you're going to do is you are going to mark your 15 minutes zone. I hope you see that. So this particular candle
Yes.
right now is what we call your 15 minutes zone. So let me mark it 15 minutes. So this is what price is doing on the 15 minutes. You have your shift in market structure, you have your 15 minutes zone.
Mm.
So what you do is to wait for price to return again to your 15 minutes zone. So this is price returning back to the 15 minutes zone. So now that price has returned to your 15 minutes zone, what are you going to do? Go
Finish.
to another time frame, which is going to be your 5 minutes time frame. So once price comes to your 5 minutes time frame, that is the zone you have on your 5 minutes time frame. That's the particular zone you will look to enter the trade from. Okay, that's the zone you look to enter the trade from. So let's see what is happening on the 5 minutes time frame. Now we're going to drop to the 5 minutes time frame, and for what you can see, we have a 5 minute shift. So which color are we going to use for the 5 minutes zone? So let's use something like blue color. So the blue color right here is the 5 minutes. And on the 5 minutes time frame, we have what? A shift.
For a break with your market structure.
So now that you have a shift in market structure on the 5 minutes time frame, what you do is you mark your 5 minute zone as well. I hope you see that. So this is your 5 minutes.
Yeah.
I'm actually trying to label it so we know your 5 minute zone. So where you get involved in this trade is from the 5 minutes time frame. Now, what you have to do is simply place your order at the 5 minutes time frame, wait for price to tag you in, and you need to buy. Very simple. Let me go again. You mark your 2 hour zone. You don't trade from the 2 hour zone. You wait for price to return to your 2 hour zone. You wait for a shift in market structure on 15 minutes time frame. Once you have the shift, you mark your 15-minute zone. Once you mark the 15-minute zone, you wait for return to zone. Once price returns to your zone on the 15 minutes time frame, you wait for the shift on the 5 minute time frame. Now, you see we have a shift of structure on the 5 minutes time frame. You will mark your 5 minute zone. Now, once price returns to the 5 minute zone, you take the trade from the 5 minute zone. This is why it's called a fractal entry. You see, the higher time frame, the medium time frame, and the lower time frame is saying the same thing. What is it saying? It's saying that price is ready to buy. That's why I said fractal confirmation hardly gives false signal. It gives you a direct signal, a very valid signal. So that's one good thing about fractal confirmation. So let's see a live example on the charts right now. So from what you can clearly see over here, this is AUDUSD. This is the 5 minutes time frame. I hope you remember this particular trade from the community. We had this trade. Let me try to share the screen to the community right now. Let me just share the screen right there. So I show you this trade opportunity when it was shared. So let me try to find this particular trade opportunity that was on AUDUSD. So this was that trade opportunity where price was offering about 5%. This was it right here when it was running 2%. And this is that exact trade opportunity which I'm going to use for this particular example. So you know that I'm showing you live trades that works, okay? It's not a random chart. Yes, so that is a live trade. And you see, I know you are part of this particular community. You see everything we do in this community. So this is the exact same trade. This is the break of structure right here. This is the first liquidity area I marked before price build small liquidity around this particular area. So I said this particular strategy is a strategy of patience because we waited for about 1 month for price to return to this point of interest. And another important thing you need to note about fractal confirmation is this. Fractal confirmation needs a lot of patience because you just need to wait and wait and wait. So that's one thing you need to note. You have to wait a lot if you want to trade with fractal confirmation. Now, this is the 2 hours time frame. What do we need to see? What we want to see price do is to return to this particular zone, which is our demand zone. Let's press price forward. It returns to our zone. So this is price returning to our point of interest on the 2 hours time frame. Now, we're not going to enter aggressively, right? This is an aggressive entry right now because price has returned back to our zone. We're not going to use the aggressive entry method. What are we going to do? We switch time frame to a medium time frame. And what is our medium time frame? Our medium time frame is a 15 minutes time frame. So let's see the 15 minutes time frame right now. So this is the 15 minutes time frame right now. And you see price just returned back to this particular zone. You see, price just tapped into the zone and we have some retracement right now. Now, what do we want to see? We want to see a shift in market structure on this particular 15 minutes zone. So if you read the trend of the market here, you see price is bearish because we have price take this particular low. We have the retracement. Price pulls back again, takes this particular low again before the mitigation. So let's press price forward on the 15 minutes time frame and see what price is doing. Now, price starts to slow down. You see multiple candles, price slowing down. So what we want to see is price sweeping this particular liquidity because price is now building liquidity inside our zone. So if price is able to sweep this liquidity and moves above these multiple candles, then we can consider this as a change in the market direction. So
Market
let's see
structure.
what price is doing. And you see, boom, price moves underneath this particular low, sweeping the liquidity. So we want to see price either react above this high or react above this particular high. And another important thing you need to note is once price is shifting in structure, it needs to move with an institutional candle. And I hope you know what institutional candle means. Institutional candle is a candle with large bodies that has imbalance. I hope you remember that.
Yes.
So plain price forward, you see price moves above this particular high, which we can now consider as a market structure shift. So once we have this shift in structure, what did I say? I said you should mark your 15 minutes.
Mark the zone.
Yes, so this is your 15 minutes demand zone right here. Hope you see that. This is your 15-minute zone. And this 15-minute zone, you know, this is actually a confirmation entry. If price returns back to this zone, it's a confirmation entry. But you're not going to use that
Yes.
confirmation. Why?
Wait
You're
for
waiting
that
for a
confirmation.
fractal confirmation, which means you'll be dropping to a more lower time frame once price returns to this zone. So let's press price forward and see how it goes. And you see, price was even able to sweep the liquidity above this particular high before we start seeing the retracements. Now, price mitigates the 15-minute zone. I'm trying to zoom in so you see it clearly. Price now mitigates the 15-minute zone. And this is exactly what we call a confirmation entry. But you won't get involved using this confirmation entry. What are you going to do? You drop to the 5 minutes time frame to confirm that price is actually ready to start moving to the upside because price moves and prints its price action from lower time frame to the higher time frame. So if the lower time frame is telling you, okay, price is ready to move, then you get involved from the lower time frame because getting involved from the lower time frame, which is your 5 minutes time frame, is more like getting involved with a sniper entry. So let's see what price shows us on the 5 minutes time frame. This is actually the 5 minutes time frame right now. I hope you see that. This is the 5 minutes time frame, and on the 5 minutes time frame, you see we have the first zone, which is the 2 hour zone, and you see how large this particular zone is. This is another zone right here on 15 minutes time frame, which is very large. Now, what you want to see price do on the 5 minutes is to break the recent structure or the shift. So this is a very good high. If price takes this high, believe me, it will be nice if you try to get involved. Now, talking about the market structure shift on the 5 minutes time frame, this particular zone right here, if price moves above this particular zone, it will be confirmed a market structure shift on the 5 minutes. But in this case, I would want us to use a break of structure because if price breaks this higher time frame structure, it's a more stronger confirmation. Now, price moves above this particular high. Now, what you do is you go ahead and mark your 5 minutes zone. Where you'll be getting involved right now is from this 5 minute zone. Now, just take a look at this price action and tell me your observation.
I don't observe anything that's been hidden. All I know is that I can see it, my market is already making clear market structure shift.
What I wanted you to observe right here is the size of our zones. I hope you see the 2 hour zone was very big. I hope you see that. The 2 hour zone was
Yes.
very big. Then the 15-minute zone is also big, but you see the 5 minutes time frame zone is more like a smaller zone. It's actually the smallest right here. So what does this tell?
Yes.
This tells you that you'll be entering like a sniper with a smaller stop loss. I hope you see that. Your stop loss in this is very small and you will have a very big target because at this particular point, you're going to have a lot of profits target. Firstly, you can target this high. And targeting this high with this kind of zone, you'll be able to make about 12%. Now, we have another high right here. Targeting this particular high, you might be able to make about
Like how
22%
much?
around here. Now, we have even this external range liquidity right here. You can make money from here. These are your targets. You can make up to 50% with the same setup. I hope you see that. So now let's press price forward on the 5 minutes time frame and see how price mitigates our zone, and from there we can go ahead and check for our profit targets. Now let's wait for the retracement. Now you see price comes back, mitigates our zone, and now starts to move away. Tells you that, okay, I'm ready to move. Now let me play it a little bit
This
faster.
one.
Boom. I hope you see that. Now let's see it on the 2 hour
Yes.
frame. So it will be a little bit faster. Here is the 2 hours time frame. And getting involved from that kind of zone and targeting this external range liquidity. Do you know you can make up to 100% from this trade? That's the beauty of fractal confirmation. But truth be told, you might wait for a whole month and you see fractal confirmation just 3 times in a month. It doesn't appear always. It hardly appears. But when it appears, it gives good results. Now, playing price forward.
Yes.
Price gets to our profit targets. And now we have little retracements, and this is the current.
Oh my God. Wow.
That's the beauty.
Mm.
But just like I said, I hardly trade with this because, firstly, you have limited trade opportunities, and sometimes you might miss. It's possible to miss. If you refine your zone too much on the lower time frame, you're going to miss the trade, and it's going to be painful waiting for the trade for more like 2 weeks, and you miss the trade. So, but it's a very,
Yes.
very good trading pattern using the fractal confirmation. Now, it has its own advantage. It gives you sweet percentage if you want to trade with it. So that's it.
Okay.
So I don't know if you have any question on fractal confirmation.
No, it is a perfect, clear explanation you explained
All
to me.
right.
I have one question.
All right, go ahead.
If for instance, there is a falling trade and there is a market is bullish, and after some time, maybe there is a pullback, and that time is pulling back. I want to know this: how can you enter exact point a pullback, or if you can jump to the trade?
Talking about pullback,
Yeah.
every trader has thought of that at some point. Pullbacks are
Mm,
unpredictable. You know,
mm,
price moves. This is a pullback, right? This is a pullback.
mm,
Now,
mm,
price has pulled back this way. Let's take a look at the next one. You might be expecting this kind of pullback. Price might pull back a little this way and continues. Now, the
mm,
next one, it might pull back very deep and continues,
mm, mm,
right? And continues. Now, let me give you a little
mm,
illustration. Now, let's imagine, okay, you saw price pull back this way the first time, right? You were not able to get involved. Then it moves to the upside. It moves to the upside. Now, you see it starting pulling back, and you have an expectation that when it pulls back, maybe very deep around here, you're going to get involved. But it was not able to get to that point. It moves away
mm. It's like,
without pulling back to that
mm,
point. Okay, you say, okay, next time, if it pulls back a little, I'm going to get involved. Now, price pulls back a little. You took your buy right here, looking to buy to the upside. Now, it pulls back very deep. I hope you see
mm,
that, which tells you that pullbacks
yeah.
are unpredictable. You can't predict it. This is why we trade with supply and demand zone. Just wait for price at your supply zone. When it gets to that zone, you buy from there. I hope you see that.
Okay.
If it doesn't get to your zone, don't
Mm,
buy. Wait at your supply zone. If price comes to your supply, you sell. If it doesn't come, don't sell. Because if you try to do it, you see, it's going to be very random. Now, take a look at
yes.
some of the pullbacks we have over here. Move to the upside, deep pullback. Move to the upside, smaller pullback. I hope you see it.
Mm.
Move to the upside, a deep pullback again.
Deep
Now,
pullback.
that's range. Now we have a very, very deep pullback. Move to the upside, deeper pullback. Now at this point, you might be waiting to trade the continuation after the pullback, price drops.
Now it has changed market shape.
Change in structure. So no need to start trying to trade pullbacks. Although people
Yeah.
usually trade it, there are people who are experienced in trading it. But based on my trading strategy, I just find it hard to trade pullbacks. All I do is to wait for price at my supply and demand zones.
See, some people use Fibonacci
Yes. Some use
retracement.
the fib retracement tool and trade from some levels. And using
Yes.
the fib tool is actually very, very okay. If you use the fib tool to trade pullbacks, it's very okay. Maybe once price comes to your discount level or your premium level, you look to buy or sell. Now, using the fib tool gives you an advantage actually. It gives you an advantage because if price pulls back maybe into a range around here, this range, this is actually the green line right here is your equilibrium level. So most people who trade pullbacks, they usually buy once price moves below the equilibrium level. And another thing you have to note is inside this equilibrium level, we have a levels around this particular low. These lows are more like other blocks. Other blocks aligns inside the zones around here, and those zones are the strongest. I hope you see that. So those who trade pullbacks, most times they might be trading from demand zone if they want to buy, because these zones around here are very strong zones. They align with other blocks. So most times when price gets to their premium level where they look to sell, those levels sometimes aligns with supply zones. They might not really have the understanding, but this is what happens most times. You see them trying to trade these pullbacks. I hope you understand that.
Yeah.
So that's
Yes, sir.
most times these strategies, they look alike, they say the same thing, but it depends on how you decide to interpret it. That's just the thing. So
Yes.
if you have any other question before we end the session.
I will have the other one. Another one tomorrow.
All right, so get ready for your
Yes, sir.
session tomorrow. I teach you how to do time frame alignment, understanding price across
Okay.
time frames, and also letting you know the time frames that is going to suit your trading style based on your activities. If you have a business you run, I teach you how you can run your
Yes.
business and take your trade. If you're a full-time trader, you want to trade
Yes.
full-time, I teach you how you're going to do it and all that. That's what we cover tomorrow. So
Thank you very much.
thank you very much. This is the end
Thank you.
this particular session.
Appreciate it.
All right.
Oh.